Hello, everyone, and welcome back to another episode of WagMe TV. We have a great one for you guys today. We're covering one of the top projects to watch, honestly, this year and beyond. Reserve Protocol, some recent news about the project, and a lot going on there. A lot of exciting stuff. So we're going to dive deeper into that today. And obviously, as always, we'd love to see what you guys think about it all. Zoe, I will toss it over to you.
Yeah, Reserve, super interesting project, one that we've covered in the past. And, we covered it a few months ago, so I wanted to give all the viewers kind of an update on what's been going on, what's the latest news in the world of Reserve Protocol. So when we covered the project last, as a refresher, it's kind of a permissionless platform to build and deploy kind of asset-backed currencies, asset-backed tokens, anything from stable coins to index type products, things of that nature. Now, when we talked about it last time, there actually were no products built on the platform at that time. The platform had just come out, and it was very exciting, but there weren't actually any products built on it. Fast forward a few months now, we actually have 3 products now built on the Reserve platform. One is eUSD, which is a dollar peg stable coin, just similar to any other stable coin like USDC or USDT, anything like that, right? One-to-one backed with other stablecoin derivatives. The second one is also dollar based, but this one is actually more of a tokenized high yield savings account. So currently it's yielding about 8%. And so if you're holding this token, you can kind of just passively earn that 8%, which is coming from underlying farming positions. And lastly is an Ethereum liquid staking index. Right now it's backed by Aave it's backed by Lido, Staked ETH, and Rocket Pool RETH. And so obviously, we've talked a lot about liquid staking derivatives and, the move from Ethereum from proof of work to proof of stake and all the stuff that's caused. And so this really enables people to get diversified exposure through a basket of these liquid staking derivatives. So those are kind of the 3 products that have launched so far. Kind of want to give it a little break here. Do you guys have any questions or anything?
No, I mean I think that's a great rundown. It's exciting that the protocols, already had 3 products launched in the time that, we've spent in between covering them. But yeah, I was kind of wondering, so what's this yield coming from when you're looking at a high yield savings account? A lot of times in crypto, the biggest problems are counterparty risk. So yeah, where are these yields coming from with the high yield savings, USD, and some of the other products?
Yeah, absolutely. So I think the best way to look at that, I'm really glad you asked that question because you're right. Obviously, uh, today more than any other time, proof of reserves is extremely important, right? You want to be able to see where exactly yields are coming from, where your capital is being deployed. So here's register. This is just the DApp, and here you can see all the R tokens that have been deployed. For each of them, they're backed by yield bearing collateral. So, for example, if you wanted to go to eUSD and you wanted to see the collateral backing here, you could scroll down to the collateral backing. This is what the basket is made up of. So as you can see, it's 25% each, and it's split 4 ways between Aave and Compound, USDC and USDT. So right here, you immediately have proof of reserves. You don't have to trust anyone. This is just simply reading from a smart contract, verifiable reserves all on chain. Similarly, you can go to hyUSD, which is the one that you had asked about, the high yield savings account. And here, this is, the yield is coming partially from Flux assets, so FUSDC and FDAI. Flux is a protocol that provides on-chain exposure to treasury yield. And so you can really look at this as a kind of a proxy to earning treasury yield on chain. And then the other 2 parts of the basket are convex pools. And so these are convex pools that you can go onto, Curve and Farm, and then, further yield from them on convex. And that's really the collateral backing of hyUSD. Similarly, to ETH Plus, the third R token, this one, as I mentioned, is 50% Lido staked ETH and 50% RETH. And then all the metrics on all of these, you can come up and look here. So, you can see that the estimated yield right now is that blended average of the underlying protocols, which is currently sitting at about 3.59%.
And real quick for you, what's the advantage of maybe getting this ETH plus or buying ETH plus maybe instead of ETH or some of the other like Ethereum trackers that you have out there in the world of DeFi?
Yeah, so if you just buy naked Ethereum, you're not going to be earning that staking yield. So that's a really important kind of piece, right? If you just buy naked Ethereum, you're not going to be getting the staking yield that's coming from validating the blockchain. If you wanted to compare it to one of these underlying tokens, obviously there's a lot of different liquid staking derivatives kind of entering the market. The most known is obviously Lido staked ETH. So why wouldn't you just hold Lido staked ETH over holding a basket of them? It really comes down to diversification, right? Anytime you guys are managing your own personal portfolios, I'm sure you guys have heard it's important to diversify. And in the world of crypto, it's even more important because of all the risks that are inherent with crypto, right? So if you don't want to put all your eggs in one basket, this is one method that you could take to just kind of get diversified exposure. Obviously, right now there's only two things in this basket, but as more and more liquid staking derivatives become more and more popular, we plan to add those in. Like governance can add those in and put it to a vote, so you can further diversify this basket over time.
Yeah, no, that's a good point. And it seems like you're kind of buying, two of the bigger players in the space that are, providing security for the Ethereum network. Like, if there's anybody you want to back in the ecosystem, it's these two.
Absolutely.
Yeah,
absolutely.
I guess. Sorry about that. Well, I guess one quick question I had for you on that. So, I saw on the screen, right? It was like estimated yield, right? That's just for grabbing it, holding it, I assume, right? You don't have anything extra to do with that. So,
Correct.
I guess from like a DeFi perspective, say there was like, is there any other way for me to make more yield on these products if I wanted to? Things like liquidity providing, all those, that's what we talk about in like the crypto space a lot. Is that something that's available as well, or is this kind of solely just supposed to be operating like a high yield savings account?
Yeah, I mean that's a great question, and for those folks that are maybe a little bit more sophisticated, more into DeFi, all the degens who enjoy kind of yield farming, there's absolutely some opportunities that I'm happy to show you guys here. We go to Curve, and you have to be hooked up to the Ethereum network to get access to this. So make sure it says Ethereum up here. But if you look up eUSD, there's actually two options here. First of all, it's just eUSD and Frax base pool. So this is just going to be a stable coin focused pool between eUSD, Frax, and USDC. Currently, that's earning up to 12% here on Curve. So you can go check that out. Obviously, a pretty juicy yield. Most people obviously take these LP tokens and go stake them on Convex to get that boosted yield, but that's up to you guys. Obviously, a juicy yield here for just simply stable coins. Similarly, hyUSD, which is paired with eUSD together, is also earning currently almost up to 40%. So definitely a very juicy yield here on this pool for your farming community to come take advantage of. And then lastly, we can go type in ETH Plus up here. Here we go. So as you can see, ETH Plus yielding almost up to 25% here on Curve. So really on stables, you can earn in the 30s if you wanted to kind of take on that risk tolerance. Similarly, if you wanted a lower risk kind of opportunity with just simply eUSD and a stable coin pool, that's yielding double digits. If you're looking to get nice juicy yield on Ethereum, right here on the ETH Plus naked ETH pool, earning almost up to 25%. So definitely a ton of opportunity here for farmers, liquidity providers, anyone looking to make additional yield here.
I don't know about y'all, but I know what I'm doing after this episode.
Yeah, and it's not financial advice, but I would say that this is pretty interesting research, looking at just like what you can really do with your money on this. So thanks for running through that, Zoe.
Absolutely.
Yeah, that's super helpful. And I think on the topic of Curve, right? We saw one of probably one of the most well-known investors / techie heads of the last 6 months to a year, Sam Altman, obviously coming out as an investor of Reserve as well. And we know obviously now in that article that we had cited before, that Reserve is putting 20 million into the Curve Wars power play, right? And obviously you were just in Curve there showing a little bit about that. But I'm kind of curious, obviously, more pairings have come out. Reserve has clearly grown since the last time we talked, TVL and just overall team wise, it seems like. But I'm kind of curious, like what's next for you guys? Like what's kind of the outlook with Curve and what's the play there, and where do you kind of see Reserve going?
Absolutely. Yeah, that's a really great question. And just for the viewers, we'll also link this article as well. But this was the article that Garcia was referring to here. Pretty big news coming out last week where Reserve is basically making a strategic investment into the Curve ecosystem, as I was kind of going through before. And it's a really good question. Like, what is this? It looks bullish. Obviously, they name dropped Sam Altman, who was part of the seed round like 5 years ago or whatever. Who knows if that's even relevant anymore? But it looks like it's very bullish news. But what does it actually mean, right? Really, this is like, in my view, like a big part of the growth strategy here, right? So in the world of DeFi, liquidity is the hardest thing to get, and it's kind of the name of the game. Liquidity gives you distribution opportunities. It allows big players to hold and trade your tokens. It's really a gateway into the retail masses and getting your product with a lot of adoption. And the best way to do that right now, there's a few different kind of competing dexes and things like that, and dex ecosystems that you can choose to be a part of that offer rewards for liquidity providing. And Curve is at the top of that list. Obviously, their technology that we've covered in previous episodes is really, really good. They have a ton of TVL. They've been battle tested time and time again. They have billions in TVL, and they're just a really, really good ecosystem to be part of when you're trying to drive liquidity for tokens. And so for Reserve, right now, there's 3R tokens. In the future, there could be a lot more, but each one of those tokens is going to run into the same kind of issue of needing to drive liquidity in the first step towards mass adoption. And there's a variety of reasons why liquidity is important in DeFi. One of the major ones is getting listed on centralized exchanges and getting listed in wallet apps and things of that nature, being able to be held by DAO treasuries or larger investment managers, things of that nature. The liquidity is a huge piece of that puzzle. And what we see here is Reserve really kind of putting their money where their mouth is and saying, okay, if this is kind of the name of the game, if this is an investment that we want to make, then we're going to kind of double down here. For the farming community, for the yield farmers, for the liquidity providers that we were kind of just mentioning previously, this is really great news, obviously. That this means that the yields that you're seeing on these pools are not just a fluke thing. They're not going to be kind of like a one-off thing. But with this investment, you could see that Reserve is committed to the Curve ecosystem and committed to driving sizable incentives towards the liquidity providers that choose to kind of work with them and participate in their pools. So for me, that's really what this kind of news means to me. In terms of what it means for the future, it really is just a commitment to driving liquidity and driving distribution channels for the products created on Reserve's platform.
Thank you for that. That was a great breakdown. That was awesome. Well, I don't know about anyone else, but I'm excited to dig more into Reserve and the world of DeFi and see what I can do to beat some of those S&P type yields of 8-9%. I mean, looking at 20 to 30%, that's a lot juicier. So that's awesome. Thank you, Zoe. Anything else before we wrap up, boys? All righty. Well, thank you guys for joining. As always, like, comment, subscribe. We always want to hear your thoughts. We'd love to hear if you guys are jumping in and checking out some of these yields, getting into DeFi a little bit more. But appreciate you all, and we'll see you on the next video. WAGME.